Mike Sullivan. I'm a former IRS agent and teaching instructor. Welcome to my tube. I have worked about 10,000 IRS cases. One of the reasons you want to listen to me is I've been in tax defense for 42 years and I was a teaching instructor with IRS. So you have the best of both worlds. People learn about tax resolution on the outside. Not only was I a former agent, I actually taught the programs within the IRS. Go to my website if you want to learn more about me at 777irs.com. Please go there. I've been on the national news. I was on there actually 2 weeks ago on News Nation. Anyway, if you have a CP504, boy, it is balls out here. You better do something because IRS is coming. IRS has sent you a series of letters, LT14, CP501, CP503. The CP504 usually comes out certified. IRS is about to wash their hands of you, and next comes the vaunted LT11 or the 1058 letter, and that's it. IRS is coming out completely after you now. They're going to have liens, levies, and wage garnishments, and they can do anything they want at this point. The 504 letter is a wake-up call. That's why they send it out certified. Some of you don't get it certified because you didn't change your address with IRS, but if you got that letter and you're calling me, you have to do something or someone has to do something. And let me tell you what that something is. So as a former agent, the first two questions I would ask you is, have you filed all your returns, number one, and number two, are you current? Have you solved the problem by making sure you're catching up with your taxes for this 25 years? Those are the first two questions we need to address, and then we have to go backwards. What is IRS going to want? Well, if you haven't filed returns, they're going to want you to get current. They're going to want you to file all those back tax returns. And then number two, the big thing is they're going to want a financial statement because they're going to want to close your case off the enforcement computer, which is good for you because now IRS is not going to levy, they're not going to seize, they're not going to do anything. So anyway, at that Sammy, by the way, she gets an appearance fee. She gets 2 bones today just for showing up on that camera. But anyway, IRS with that financial statement will put you either, like I said, in currently non-collectible a payment agreement, or you can file for an offer. Before you go running off, if you're going to call IRS yourself, hold back. IRS wants a financial statement, and when they do, that's driving the entire outcome of your case. Unless you know what they're going to do with that financial statement, do not call them because you're going to make a big mistake and you're going to wind up with a payment agreement you do not want at the least. But if you don't owe a lot of money, you owe up to 30 or 40,000, it's okay to call them if you want a payment agreement. That's not a big deal. You don't even have to call. Everyone doesn't have to call a tax professional right away. These are for people who have larger debts. IRS is going to look a lot more deeply than those who really maybe have under $30,000 worth of debt. Anyway, if you need me, give me a call. I tell you what you want. I want to tell you one big hint. IRS, you need to look up the IRS national standards. This is big. I tell everyone this on their own video so they don't make this mistake. IRS, when you give IRS a financial statement, they're not going to take your expenses. They're going to look at the IRS national standards set up by the Department of Labor. If you want to know what they are, type in your toolbar IRS national standards. You will learn the only expenses that IRS are going to allow you for food and clothing, housing and utilities, car payments, and car expenses. And you're going to find you're not within those standards, and therefore you're just piling up more of a payment agreement to IRS. So be very careful. Give me a subscription. I really appreciate those. If you need me, you know where to get a hold of me. Thank you.